Thank you for being here today, Shawn.
Thanks for having me.
Could you introduce yourself to the viewers and also tell us about your career?
Okay, my name is Shawn Khunkhun. I am the CEO, President, and Director of Dolly Varden Silver. I've been working in the mining industry for 20 years, and my predominant role that I play, whether it's as an advisor, a director, in this case CEO, is I've developed a network over the last 20 years of precious metals investors globally. So these are institutional investors, these are high net worth investors, and ultimately what I've tried to do is identify opportunities, whether they're at the project level within a company, where the right amount of capital and science can unlock opportunities and advance projects, and ultimately to the benefit of the shareholder, but also the stakeholder.
What do you consider to be your greatest achievements?
My greatest achievement, I'm one of these people that is moves the goalposts. So if I get from step A to step B, I want to go to step C. So look, early in my career, in my 20s, I was with a company where we raised, I think the number was over $300 million in equity financings. So this was for a company that started at a sub $10 million valuation that went up to a $1.4 billion valuation. So that was a great achievement, considering I was in my early 20s, considering it was my first foray into the mining industry pertaining to capital markets and publicly traded entities. So that was a big achievement. But there's been a number of achievements over the years. I remember identifying an opportunity in the recently taken over windfall camp of Osisko, a little company called Bonterra Resources that was trading at a $500,000 market cap. I became an investor, and I brought many other investors in, and within 18 months, that was a $100 million company. So, over the years, bull markets of the 2000s to the bear markets of 2014, 15, I've managed to find opportunities, find undervalued opportunities, and bringing the appropriate scientists or engineers or teams to advance those projects, and then with the right capital from the right investors that had the right time horizon. So those were big achievements in the first 10 years of my career. In the last 10 years, 5 of the last 10 have been focused on building Dolly Varden. And what I'm proud about there is we've taken a company from a $20 million valuation. It trades at closer to a $350 million value today. The company's in incredible shape. It's got no debt. There's $40 million in the bank. We've made several discoveries over the few years that I've led the team here. And it's about being patient. It's about getting the commodity right. I came in to silver twice in my career, once in 2010 and in September of 2010. And by April of 2011, we saw the silver price, go dramatically higher. And I think, my timing at Dolly Varden has been appropriate. I came in at a time where silver was $16, and there was a lot of pressure from certain shareholders to just take the Torbrit mine back into production. A lot of investors were telling me, look, Shawn, you've got 40 million ounces of high-grade silver. You could produce for a decade at 4 million ounces a year. And I stood up to them and I said, no, we'd be giving the silver away. We need to wait till we get some real price discovery in the market. And here we are at twice the silver price. And the proof that it was the right strategy is the fact that the share price is up 500%, the market cap's up 2,000%, and I think we're just getting started. We're in a universe now where, industry is going to consume all mine supply by the end of next year. So that's going to be wildly bullish for silver prices. I think we're going to see a new high by 2026. And then, outside of Dolly Varden, I sit on some boards, and I am an active investor in a number of companies. And I think what I learn on some of these other projects, whether they're gold projects, whether they're copper projects, whether they're in Canada or outside, is I take some of the understanding, maybe it's geology, maybe it's through negotiations, and I bring that knowledge to Dolly, and I think it's made Dolly a better company. And so, I'm proud of the team that we've built. I work within the Fiore organization, where Frank Giustra is the CEO. And we've got 27 mining engineers. We've got about a dozen of the best geologists on the planet. We've got a team of 6 capital markets professionals. And it takes a village to raise one of these companies. And I think we've got from the public micro cap segment, I think we've got one of the best teams going in the business.
And by the way, I forgot to add, but I meant greatest achievements so far. I still believe the greatest achievements are ahead of you.
I hope so. I think part of it in our industry is it takes a bit of a market. If you look at the greats, if you look at the Eric Sprots, the Pierre Lassans, the Frank Giustras of the industry, the Ross Beatties, the Lundins, you need a market. And I think for a lot of those greats, some of the greatest wealth creation they experienced was from 2000 to 2010. It was in that decade. And we haven't, and that was if you go back to 2010, 2011, in a 100-year period, that was the best mine finance market that we've ever seen in history. Okay. I think we've gone through a decade-long bear market. Okay. We've gone through a decade-long bear market. What we're setting up for is one of the next great opportunities. And that's where you're going to see new legends emerge. And and what's incredible about this moment is the commodity prices, with gold at 26.41.90 on the spot price right now, with record high gold prices. Gold always leads the commodity complex, right? Silver follows. And so I think, and the fact that you've got equities and this, a record disparity between commodity price and equity price, there's so many projects and companies that are on the mat that are, in so undervalued. And it's clear as day to me that this is the time to selectively start picking away at either as an investor or either as a corporate. But because of what we went through in the 2000s, so many are reluctant to repeat some of the mistakes of the past. I was listening to Mark Bristow. I was recently down at the Denver Gold Forum, and he talked about how Barrick stayed disciplined, or Randgold at the time stayed disciplined during that rise in the gold price when so many other companies took on debt and went for marginal ounces in terms of grade, where what made Randgold so successful was staying disciplined. And I think the industry's actually taken that too far and is staying way too disciplined right now, where we should be going for more growth. Particularly, I think there's an incredible opportunity in the mid-tier category. We've got a monster void because of so much M&A of putting together companies like Newmont and Goldcorp, or in the case of Barrick and Randgold, the Yamanas of the world no longer exist, right? And they've been merged up. And I think there's an incredible opportunity for a new player in gold, in silver, and in copper to emerge and to fill that void that is the mid-tier category.
Could you, in your own words, summarize this year's drilling? What have you learned and what has surprised you?
So when I go back to the start of the year, this was a historic year for Dolly Varden. This was the earliest start to drilling in the company's history, number one. Number two, we started with a planned 25,000 meter drill program. And the idea was on three fronts. We had 3 buckets. So bucket number one was looking at regional exploration opportunities. There's certain things that we've learned about the project over the last number of years of drilling. So number one, we learned that there's a periodicity, that every 1,400 meters, there seems to be a new vein, a new opportunity for discovery. So we understood the periodicity, we understood the geometry, the dip and the plunge. And so we started the year on that regional exploration front, and we hit at Moose, we hit at Chance. Those results were released in June. They were very successful. We were honing into 3.5 kilo material at Moose, and some big numbers and some big width. Over 20 meters of over 200 grams at Chance. So very encouraging regional exploration. These are veins and results that are not in the 43-101 compliant resource estimate. So this is adding. And so again, the three buckets. Bucket one was the regional exploration bucket, and we validated that. We have many, many, many more holes pending from other regional targets, but right out of the gate, that's where we started. We started with a high risk portion of the program, and we delivered. The second component was Wolf. And Wolf has been an area where we're growing high-grade primary silver like nowhere else on the project. And this has been the showstopper. This has been center stage. If you look at some of the results that have come out, finding kilo material over 10 meters, consistently finding 20, 30-meter intercepts of over half kilo material. So what looks like is happening at Wolf is as we get deeper, the system is opening up, the grades are getting richer, and it's getting wider. So Wolf, we put out multiple result-oriented press releases, 2 in August, 1 in September, and Wolf is the gift that just keeps on giving. And then lastly, the third basket, the third component, where we've had over 25 drill holes just into the Homestake deposits, those assays are pending. So I can't tell you what I've learned from that part yet because we don't have the data, but we should soon. And we've increased the drill program. So we've gone from 25,000 meters to 32,000 meters. I'm just getting more confidence in the project. We're growing primary silver. We're making new discoveries outside of the resource estimate. Our shareholders have come to us, and they've given us a lot of cash this year. We've raised a total of $47 million in 2024, which is a huge number for a small exploration company. And today we're sitting on $40 million in the bank. So we've validated. Oftentimes in our industry, we're an industry where there's technical success that the market doesn't validate or recognize. In the case of Dolly Varden, with the share price at or close to all-time highs, and with the amount of capital we've raised, it tells me that the market is recognizing high-grade, pure silver, some incredible gold intercepts, and a lot of growth.
So out of the 32 kilometers of drilling, how many meters and holes have you completed so far?
So far, we've drilled 68 holes. We've completed 30,890 meters of drilling.
So in other words, you will be wrapping up in next or 2 weeks from now?
Yeah. That's sort of the plan right now is, and again, it's all, results and exploration determined. So depending on where we are, we might go a little bit longer. We might call it short. So it's all results, and, many factors in the field, what we're seeing in specific drill holes, that will determine whether we go a little bit over that 32,000 meters, where we stay a little bit longer up at site, or whether we wrap up here shortly.
So ultimately, what do you think the split between Wolf, Homestake Ridge, and other sort of regional targets like Moose and Chance will be?
So far, out of the 68 holes drilled, 28 of them have gone into the Homestake area. So 25 into Homestake deposits, and then 3 sort of more property-wide targets. So that leaves 40 holes being drilled on the Dolly Varden, the original Dolly Varden land package. and a good portion of those going into Wolf.
Timing of assays and periodicity of assay release, what should we expect?
So we've had 4 result-oriented press releases, 1 in June, 2 in August, 1 in September, and I think assay times right now are going from 5 weeks to 6 weeks. And so I think we'll get out the bulk of our drill results within calendar 2024. But then, for the Christmas season, the lab shut down for a little while. So we might have, just a few remnant holes that we release into January.
But in other words, yeah, you will continue with the same sort of sizes, 3 to 5 holes, so sort of per release.
What we try to do is, as information comes in, we try to batch it appropriately. So, let's say we drill, 4 holes off of one pad. We'll want to get that information from that one pad, so the market has a clear picture of what's happening. So we do try to batch. So listen, there's been times where we've released 25 holes in one release in previous years. It just depends on what information we're getting from the assay lab, and trying to paint a picture around the results and the appropriate context.
Makes sense. So then you have used applied directional drilling in order to sort of wedge off from apparent holes. How much money has that saved you?
I calculated, and again, we didn't use directional drilling everywhere, but my calculation in August was about a $1.6 million saving.
Before the season started, you mentioned that your all-in drilling cost is around 400 Canadian dollars per meter. Will the number for this drilling season be close to that?
So because we were able to drill less, right? Really, the directional drilling, let's say some of these targets are, I'm just going to use an arbitrary number of 500 meters. That wouldn't be the vertical depth, but that would be the in-hole meters, because you're coming in at an angle. If the directional drilling, if we were able to save a few hundred meters of the initial top of the hole, so essentially we're saving, in the case of 4 holes, you could save, 800 meters on one setup. Your per meter drill cost actually goes up through 400, because there is an incremental higher cost, but your overall spend is less. And so, we're probably going to come in just north of $400 all in. But it's really the meters that we're not having to drill. So you could drill those meters really efficiently, but there's still a cost associated. So net, we're saving our shareholders the cost, but incrementally our per cost meter may go from 400 to maybe 420.
Rob, thank you for being here today. Could you introduce yourself to the viewers?
Yeah, sure. Well, it's good to be here. I'm Rob Van Egmond, the Vice President of Exploration at Dolly Varden Silver, and I'm just managing the program that's ongoing right now on our project. So it's busy times right now.
What would you consider to be your greatest achievements?
Well, I think, for the company, I've been there since 2017, starting off as senior geologist. But I think the achievements there have been to make new discoveries and come up with a geological framework for this complicated project, and adding a significant amount of ounces through the acquisition of Homestake Ridge. So, growing this company along with Shawn, from a $20 million market cap to now over $300 million market cap has been a great achievement. But yeah, I mean, in my life, it's just, advancing my knowledge of geology and working on projects. Worked on some very large projects in South Africa for platinum group metals, similar type thing where there were discoveries made in a 100-year-old mining camp, just using new ideas and new technologies. So that's a very satisfying a path to take, making those new discoveries.
Let's talk first about, the first results that you had from this drill season was 1 hole from Moose and 1 hole from Chance. And I would like to start with Moose. What did you learn from that hole? And also, if you could mention the grade and interval that you have, or show it.
Yeah, sure. Well, Moose, just from a broad view here, Moose was a vein that it was also discovered in the 1920s, so the same year that Dolly Varden vein was discovered, and then the Torbert deposit, where the majority of our silver ounces are. So this is a long section of the valley. The southern end here is where our silver deposits are. And we've just kind of highlighted with these red circles, there's Kitsall vein here, the Wolf vein, which has been in the news a lot lately, that we're growing up high grade, and as we get deeper, it's getting wider and more consistent. And then Moose has the circle here, and so you notice that there's a sort of even distance between these ones, and that's what we call periodicity. And quite often it happens in geological settings where you have compressional forces, and when things break apart, they break apart in blocks, and those are quite often sort of the same size. And in this case, we've noticed that every kilometer and a half, 1.4 kilometers, there's one of these cross-cutting structures. So, we've been drilling at Moose. We extended that underneath a sedimentary cover that hid it from the prospectors in the 1920s, and we've really expanded that. And the next step north from Moose, or from Wolf, was Moose. So that was a kilometer and a half to the north. And we had drilled a hole there last year in 2023 that we just nicked part of a system, and we got 269 grams over 7.5 meters with a 1 meter interval of 712 grams. So fairly wide, and but the grade itself is above our cutoff for our resource, so could be added in. But we took the geometry of what we call these high grade plunges. So along these structures where there's little bends or folds, when you have movement, you get an opening of sort of a corridor where you have more pulses of mineralization that can come in. And so we applied that geometry of Wolf to Moose. And this year we drilled a hole up dip, all using that same geometry as the high grade plunge at Wolf. And we intercepted 5 meters of 977 grams per ton silver. So grades getting higher, and it included again a narrower interval of 79 centimeters of over 3,000 grams per ton silver. And that is just silver values. So we didn't add in lead and zinc right there. It has a bit of lead and zinc too. But it just kind of shows, a proof of concept for these structural interpretations that we have. So this year we'll be drilling down dip from there, and seeing if that plunge continues. And again, this is on one of these cross-cutting structures across the valley, similar to what we see at Wolf, and it also goes underneath that sedimentary cap at the bottom of the valley.
By the way, is it one large vein, or are there multiple parallel veins that you're intersecting?
In the case of Moose, it's one vein right now near surface, but that can change at depth. We see it at Wolf as well. On surface, it's actually 3 separate veins. That could be due to offsets from faults, or that it's taking 3 different structures. But as we get deeper on Wolf, it becomes one vein, and the grades get higher. So Moose, we only have 2 holes into it. All those other little holes that you see on this cross section, those were drilled in the 1960s, and they got some lower grade results, and it was a single vein that they were hitting. But again, anything can happen as we go deeper. It could split into more veins, or become one vein that's wider, similar to what we see at both.
Great. So you'll definitely be following up. Will you primarily be drilling down plunge, or will you also be doing sort of, how do I say it, more to the, I don't know what direction is, but sort of to the right of hole 87?
We'll probably go down plunge, and then once you have that plunge line, then you start going above and below the higher grade numbers, and that's what we're doing at Wolf, that we'll get into a little later. But you have a center line that you define, and then you need to figure out how wide it is. And so that's the first thing, is we need to establish what that plunge is. So we will be going down. This section here is looking to the north, up the valley, and so we'll be going off to the west and deeper down in this area to see if that plunge is indeed this direction, or if it's steeper, or what happens there.
Do you have any idea? I mean, now when if we try to think in 3D, what sort of the depth of the vertical height or depth of this vein could be?
Well, right now, these cross lines here are 100 meters vertical, so that's 100 meters. Down here would be 200 meters. So yeah, it's hard to say right now because we haven't tested down here. But right now, this line here defines 100 meters along that plunge line, and so once we drill deeper, we'll be able to extend that out. But just for size reference, this is the hillside here. We're looking at a long section of the vein, so the vein actually runs parallel to that section. However, this is the plunge line that we're defining. These lines are 100 meters vertical, and then this is the area where we're going to be testing to see if this plunge continues down, similar to the orientation of Wolf, or if it's steeper or shallower.
That's good. So now, if we move to Chance, what have you learned from the hole at Chance?
Chance, you can see here, it's a slightly lower grade, but it's over a longer interval, so 206 grams silver over 23 meters. And there is some smaller intervals of 597 grams over a meter and a half, 750 grams over, again, half a meter. So what it is, it's a series of breccias that come up along a structure. Chance has a slightly different orientation. It sits a bit lower down. I don't have a section of it right now, but it's a shallower plunge. So we're learning similar things, trying to hone in on what that plunge is, and it looks like it's a lot shallower than it is at Moose. But in terms of, I'll just flip to a property scale here. You can see Moose, Wolf, and Chance. You can see it's the same distance away, that 1.5 kilometer periodicity, but it's up around the corner. So you're following stratigraphy up and around, and it sits a little bit deeper in that volcanic package. So it's also at a different angle to the compressional forces, so that might be why it's a slightly shallower dip. But again, we're working on defining that a little better.
But so Chance, that is still, the veins are on a cross-cutting structure that cross-cuts the Hazelton unit, i.e. the same as you see at Moose or Wolf.
Yeah, exactly. So this, just on a broad overview, on this image here, we see the green is the Hazelton Formation. That's that Jurassic package of rocks that hosts all of the gold and silver deposits in the Golden Triangle. This is a sub-basin of the Golden Triangle. We're down in the south here, and we have these long structures that run down the center of the valley, and they're what we call basin bounding structures. So during the Eskay Rift period in the Jurassic, and that's the time when there was a release of pressure in the tectonics, and that's when all these mineralizing fluids came up. Eskay Creek, everything we have at Dolly Varden, Brucejack, and then the porphyries also came up at the same time. They're all during that time period, and so it broke, or these basins formed along these long structures. But there's also a periodicity of structures that cross-cut it, basically breaking it up into different blocks, and that's what I was talking about, that periodicity. So yes,
are those deposits basin bounded?
Yeah, those would be within the basin. So we call this long structure the basin bounding faults. So that defines where those basins occur. But then, because of adjustments due to the pressure, those blocks are broken kind of at about 1.5 kilometers lengths, and so yeah, they're basin defining faults, I guess. You have basin bounding and basin defining. So these blocks drop down, and then there's mineralizing fluids and volcanics still happening, and they fill areas that are open up, like along these structures or within sort of deeper pockets within these basins. Like that's what happened at Torbert. Kind of fill in the junction between these structures. Chance is along one of those.
So at Chance, the widths are wider, and as you said, pointed out, are lower grade. Do you have any thoughts on why that is the case?
It all depends on how many pulses of mineralization have come through. So what we see, for example, at Wolf, you get brecciated vein. We call it vein breccias. So you have a vein coming up, mineralizing fluids, and then the similar fluids will come up and they'll brecciate the existing veins. So we call it a vein breccia. But every time you get another pulse coming up, it brings in more silver or lead and zinc. And so at Wolf, if you look at a 25-meter stretch, for example, you'll see grades that vary depending on which breccia you're in. So you might get some examples. You might get 1.5 meters of 2 kilograms of silver, and the next sample will be 700 grams. And these are 50 centimeter samples or meter wide samples that make up these composites. And so depending on which breccia you're sampling, the grade distribution will go up and down across that 20 meters, for example. But what we do is we look at the full width of the vein. So we can say the vein is 20 meters wide. There's a number of breccias in there, but we're not going to be able to follow that high grade breccia. That's not cost effective for underground mining. The most cost effective is bulk underground mining. So you look at large stopes, which are 20 meters wide, so the width of the vein. So your composite will be taking all of those different results across that vein and averaging it out. And at Wolf, for example, you'll get averages of 300 to 400 grams per ton silver over 20 meters. At Chance, maybe because it's a little further away from the heat source, you might have 1 or 2 less of these higher grade pulses coming through at that point, and that's why taking that wide composite will give you a slightly lower grade on average.
Yeah, the widths surely helps a lot. What do you think? Would you like a ballpark figure on the cutoff grade that you think would be for Chance? Say that the veins are 10 plus meters at least.
Yeah, if you hone in on the 10 meters, we have results from 2019. So Chance is not it's not something new that we're drilling. We did drill it back in 2019, and then we got things like over 20 meters of 420 grams per ton, 426 grams per ton. So again, it depends how many of these higher grade breccias you get in there. But if you take the sort of the highest grade 10 meters, for example, you'll get average grades of 300 to 400 grams per ton silver. But again, it's very early stages. And the reason we went back to it after 2019 was because of all the geometry and geological sort of definition of those higher grade plunges. We didn't know about that back in 2019. So now going back, we can use the geometry that we learned on some of the other veins that these occur in higher grade chutes. And then apply that to Chance. But again, the geometry is a little different at Chance, but just the concept there is going after these higher grade shoots.
Your resource, which is a bit out of date, as you have had drilled quite a lot more since then. But so, anyways, you used a 150 gram per ton cutoff. Do you think that would be applicable for Chance, or do you think it would differ in any way?
Well, yeah. I mean, we have to update this resource. We've done over 100,000 meters of drilling since this resource. Now that's divided over 5 deposits plus exploration. So, each individual deposit may have gotten 20 to 30,000 meters, but we'll be applying all that new data to this. The cutoff is based on sort of your mining costs. So if we can use 150 because we're still applying it to sort of using that bulk underground mining methods. So, I mean, chance, like I say, is still pretty early stage, but if we can keep those widths wide enough, we would use the same cutoff of 150 grams per ton silver.
Thank you. And do you have any follow-up holes planned or already have drilled follow-up holes?
Well, right now we do not. We did not go back to chance. We are you saw the news this morning that we're closing the first tranche of $28 million financing. So we are busy doing that financing. The 25,000 meters that we had planned at the beginning of this season, we are just today completing that. So we will be extending that program, probably upwards of 30 to 32,000 meters. And then a lot of that will be used for follow-up at Wolf, Moose. We kind of moved chance to next year because Moose is sort of a closer analogy to Wolf. And as well, we're busy at Homestake Silver right now. And that's in the northern end of the property, defining that sort of silver gold zone, and we have some follow-up holes there to do. So I think given the sort of expanded program that we're looking at right now, the majority of that will be follow-up.
You have Wolf, you have North Star, you have Chance and Moose, all deposits, silver-bearing veins on cross-cutting structures, as we talked about, 1,400 meters approximately from each other in that northeastern trend. Would you say that now the thesis has been validated, and you could use that as a tool in future Greenfield's exploration? Or
it's giving us more confidence. Again, the big question is this black area in here on the slide. So the green is the Hazelton, and it sits in the valley somewhat like a bowl. And so this black is what we call the sedimentary cap. So in cross section on the Wolf vein, for example, this is what it looks like. This would be the green volcanics, which hosts the mineralization, but we have this sedimentary layer which sits in the bottom of the valley, and it's been covering up mineralization. So it's given us more confidence to go, at 1.5 km intervals, because geophysics can't see through this sedimentary layer. It's a very tight black argillite, and so it's hard to get any kind of anomalies that we can target from geophysics. So we're using geometry. So we're going up 1.5 km north of Moose along the valley and looking at the edges here. And so, the theory is validated, and we're going to go underneath the sediments.
Okay, but in other words, you're not you're more going to the northwest of Moose and not northeast of Chance.
Yeah, correct. I mean, we have some follow-up holes here at Galena, but like I say, the Chance sits a little lower in the stratigraphy. You see it sits near that red line, which is the base of the formation, whereas Moose sits a little higher up, Wolf sits a little higher up. And so we're looking more on structures that cross-cut underneath that sedimentary package.
I see. Okay. But okay. That's helpful. So I will have to correct myself. I said that northeastern trend. It's more northwest around that fault zone. I mean, if you can't use geophysics, and I assume that soil sampling and rock chip sampling isn't very helpful either, or?
Yeah, no, it isn't. Over this sedimentary, it's really helped us on the sides. So when you look at this rock samples and soil samples, for example, it shows up on this geochemistry map quite well. The yellowish color is gold in soils, so that goes all the way from Homestake, Maine, which is the main deposit that has close to 1 million ounces of gold in it. It comes all the way down the east or the western side of the valley on the ridge to a showing we call North Star, and we did do a few holes there that we're just getting results for. So those will be in some releases are coming up. And then it's the eastern side here that has the silver deposits, that hosts all the silver deposits. And that's where there's silver in soils. But in this central part here, that corresponds, you can see it's dark. That corresponds to this sedimentary wedge. And that's why you can see
will
in
you
the
be putting
geochem not much shows up.
Sorry for interrupting you, but will you be putting a hole or two somewhere in between where you think that the next the next deposit could be?
Yeah, we have a follow-up hole planned at that next 1.5 km interval in this area here, and we're going by where structures go underneath that sedimentary cap, and then just project it down. So we call those Greenfield exploration holes. So we're testing a theory and trying best to hone in on the geometry, but it's really a hole to see what's down there. Geology
Fantastic.
hole, and hopefully we hit.
Let's talk about the wolf. What have you learned so far in this year's program?
Well, this section here is a long section of wolf that is based on everything up until the end of 2023. So we had some step out holes here. The last most southwestern hole was hole 375, where we had 461 grams per ton silver equivalent over almost 27 meters. And again, including some very high grade numbers. So we're stating silver equivalents here. Generally, we don't do that. We just state silver by itself. But there's about 10% value added by lead and zinc. So what we've learned is as we're getting deeper, the silver numbers stay fairly consistent, but we start to see an increase in base metals near the base of this. And so since these holes were released, we drilled out again, stepping out 75, 80 meters. And we're finding that the vein is becoming more consistent, averaging about 20 meters wide in drill core. But it's also leveling out, and we're seeing that it's becoming vertically wider. So this year's program, because we had drilled a number of holes down the center of that high grade plunge, so that's kind of what I was mentioning earlier, where we defined the direction of that plunge, but now we have to drill above and below and see how high it is. We call it like vertically, what the extent is of that. And we're seeing that as we go deeper, the vertical extent of that higher grade silver mineralization is getting wider and wider, or shall we say taller and taller. And so that's some of the follow-up, because we had a release on some step-out holes. I think it's in this one here. No, it's not in this presentation yet. But we had a release just a few weeks ago, 3 holes from down here that had some very wide and high-grade intercepts. So we're following up on those, and we have some results that are just being finalized. So again, news flow will be happening in the next few weeks. Results are starting to come in more and more, and you're going to see some graphics that show what I'm talking about.
You have a thesis that a structure from Homestake Ridge would cut through the Wolf deposit down there, the down plunge, and that the mineralization should blow out. Could you tell us more about that? And also if you're seeing anything that would validate that.
So this is a bit of this graphic needs a bit of explanation. It's this top is what we call a long section. So we're looking at the side of the valley, and then this bottom area here is just showing it's a bent long section. So the Wolf deposit, the Wolf vein is coming in on this northeast direction, and Torbert plunges down more at a northwest direction. And so in the center of the valley here, where these two structures meet, quite often when two structures meet that are mineralized, you can get a blowout. And we see at Wolf, as we go deeper and we get closer to that intercept, as I just said, it seems to be getting wider. a higher grade silver, increased lead and zinc component. So the mineralization is becoming more robust at depth as we approach that interception point between.
Okay, so it's Kitzel and Torbrit that structures that intersect with the Wolf structure.
Mm-hmm.
Yes,
Yeah.
okay. I said Homestake Ridge. I don't know why I said it, but yeah.
No, you're right. I'll just, if you back out even more, Homestake Ridge sits along those basin bounding structures. So this, we'll call it, valley parallel. These are the larger structures. So Homestake Ridge and then Torbrit itself, they sit along those northwest structures. This one here, and then Wolf and North Star, Wolf, and then the Kitzel vein and the Dolly Varden vein are on these northeast structures. And it's where this structure and this structure cross that we hope, where there's a mineralized structure coming from the northeast, such as Wolf, where it intercepts this projection of those northwest structures. That's where we hope that we would get a blowout. And the evidence we see that this is a possibility is the fact that as we get closer to those projections of the northwest structures in Wolf, things are getting wider and higher grade.
Fantastic. And so hole 396 and 42 or 402 didn't hit anything significant. Do you have any explanation or thesis behind that?
Yeah, they were drilled up in here, and in the news release, it was mentioned that because we're trying to find out how high or how sort of the vertical extent of the higher grade silver plunge, they were targeted at a lower section. So basically, they intercepted the lower portion where it's starting to get narrower, and the grade isn't as high. So basically, we're outside of that plunge, and you need to have those holes to be able to define the size of the plunge, right?
Exactly.
When you start doing this infill drilling, you need to find the limits, and so that's part of the limits. It's still mineralized, and the structure's still there, but we're getting below that higher grade plunge.
If we not include the expansion of the program, how many more holes do you have from Wolf, and what's the split between expansion and infill drilling?
To release, I think we have another 13 or 14, something like that. Altogether, we drilled about I think it was 19 holes there, and we released 5. So yeah, 13 or 14 more to release. And in terms of expansion versus the infill, the step out holes that we released, those were the only step out holes we did. But we're coming back now to follow up on those, and the rest of them are all. We still call them expansion because you're expanding out the width of that higher grade plunge, but they're within the area that we know the mineralization is. So the rest of the holes are all from within this red area above and below, and trying to get a definition on how wide that high grade plunge is.
You have not yet had assay results out for Homestake Ridge, consisting of Homestake Main and Homestake Silver. But so we will not talk so much about it today, but could you just remind everyone of the questions that you will be trying to answer with this year's program?
Okay, so this year's drilling at Homestake, the questions we really had were based a lot on these last year's results. So at one of the last holes we drilled last year on step outs was, we had a very good gold hit. So 80 grams of gold over 12 meters, and it included a very high grade sample of 1,300 grams per ton gold with 781 grams silver. And it was over half a centimeter in some small quartz carbonate veining, some very late stage. So we're following up on those. But the bigger portion of the program is this wider zone that we defined last year. So, we had 357 grams silver equivalent. So that's half gold, half silver. Value-wise, over 93 meters. So these are wide zones made up of multiple veins. And again, because it's a different orientation, the plunge that we've defined is a little shallower. So we're also extending out this way to see how big that plunge is. and we're drilling up there right now. So yeah, we don't have any results yet. Those are all in the lab. It should be another 4 or 5 weeks before we get those results back. But that's the questions we were answering when we went to silver. The previous year, we drilled at Homestake, Maine, and we upgraded a lot of the inferred resources to indicated, because that was sort of the highest risk area. So we answered that question in 2023, and in 2024, we're now expanding out this higher grade, wider plunge.
And could you just summarize what exciting regional targets do you have that we haven't talked about yet?
Well, there's a number of targets that we don't talk about on this western gold belt, we call it, between Red Point here to Dilly Rambler. So they're on structures parallel the valley. Lots of gold in soils, as you saw from the geochem map. So there's a number of targets that we're following up on west of Homestake, Maine. And then around Red Point, we have some very strong alteration. In previous years, we've drilled very, very long and consistent intervals of, it grades 0.17 grams per ton gold. So not economic, but 300 meters of that shows that the system is well endowed with gold. And the questions that we're trying to answer this year with our drilling, mainly around Red Point, is where are some focus points where we can take where those fluids that have mineralized that whole belt with 0.17 grams gold background, where does that get concentrated? Can we find some areas with higher grade veins? And Red Point is an area that we're drilling, and we have found some areas that show an increase in vein density and thus an increase in grade.
So from an explorationist viewpoint, where do you envision Dolly Varden Silver in 2 years from now?
2 years from now, well, we'll be definitely upgrading our resources, and our geological models will be more detailed. And I think we'll have a few more discoveries. I mean, there's still a large piece of land in between, let's say, Moose and Homestake Silver. So hope to have some new discoveries in that area. And a big part that we haven't mentioned yet is the big bulk porphyry here, which we consolidated earlier this year. We now have the whole porphyry. That's a copper gold porphyry system. We're doing all the alteration models and stuff, which you need to do on these porphyries to zero in on where the main mineralized zone is. So we'll have had some drilling there, and hopefully define some copper gold mineralization similar to what you're seeing at KSM, because work done by the government geologists have age date this, and the style of mineralization is the same age as those Jurassic intrusives that hold the big KSM deposits. So that's
awesome.
Yeah, and 2 years is a long time, and we're always looking for accretive transactions similar to what we did at Homestake Ridge. So we're always assessing other properties in the area, and we may double again by then.
Let's talk about the financing. What are the terms of the financing? How much do you expect to receive, and who is participating?
Okay, great question. So we launched a $25 million financing. We then upsized the financing, going into a full 15% over allotment after the upsize was done. So we'll have closed $32.2 million. And the way that breaks down is, of the 32.2, 11.5 are hard dollars at $1 a share, no warrant. And then the balance are flow-through dollars at $1.25 a share. Now, the Sprott organization, and I'm going to include the namesake Eric Sprott as a lead investor, but also Sprott Asset Management and the different funds that make up that organization, I think accounted for about 50% of the financing. And then we had existing and new institutional support, And then we also had some existing shareholders and some new high net worth investors. But I'd say about 16 of the 32 came from Eric Sprott himself, and then the Sprott organizations, Sprott Asset Management.
What cash position will you have post closing?
The way I budget is so starting January 1. Okay, so let's fast forward a few months. Let's fast forward 90 days, and where does Dolly Varden start the year? After we paid for all the expenditures for the 2024 drill program and the G&A costs, the lawyers, the accountants, etc., we'll start the year with $30 million going into 2025. So we are fully funded for all activities in 2025 and don't need to raise more money.
I assume that's the rationale why you decided that now is a good timing. You raise at the highest price you ever raised at, and you get enough money to cover next year's drilling and potentially more.
The reason I did what I did, when I did it, and how I did it is because I've been studying the silver market, and we're producing as an industry 850 million ounces a year. By the end of 2025, and we're fully funded through 2025, we're fully funded into 2026, I think we're going to have a silver squeeze. And it's going to make the squeeze that we had in January of 2021 look like, child's play. Like, this is going to be the squeeze to end all squeezes. And the reason I say that is because industry is going to consume all of mine supply. But historically, as gold prices are at record highs, investment demand picks up. Now, historically, it's been at 30% in the malaise of the bear markets that we've had over the last decade. But so what I've done is I've looked down to the future, and I see the silver price moving dramatically higher by the end of 2025. And I've got a company that's finding and growing our mineral inventory through drilling and discoveries and through acquisitions. And we are one of the few companies in the silver growth universe that doesn't need to print shares. So if an investor likes what we're doing and wants exposure to the company, you've got to come into our market. And I think that's why our share price is outperforming our peers, and it should be further exaggerated due to the fact that we don't need to go back to market.
So with the financing that now recently closed, or closed today actually, and the capital that you raised, the 15 million that you raised before, you now have 40 million Canadian dollars in the treasury. How are you going to deploy that capital?
So we are in the midst of a 3-rig, 32,000 meter drill program. So there's going to be a strong emphasis on exploration. The company is fully funded all through 2025. So we're in an incredible cash position. We've got a very robust drill program that we're looking ahead at 2025. And so it's going to be exploration. We've also got enough cash in the treasury where if there's some accretive regional M&A opportunities, we're also in a position to maybe take advantage of those.
Could you add some color to the opportunities that you're seeing on the M&A front?
Well, listen, it's no secret that Dolly Varden's growth over this new management team's iteration has come not only by discovery and through drilling, but some of our biggest growth has come from regional consolidation. If you go back 2 years, we acquired the Homestake Ridge deposits, which tripled our mineral inventory, bringing 1 million ounces of gold and 20 million ounces of silver to the company. Last season, we purchased the big bulk, the copper gold porphyry. So we've slowly become a dominant claim holder and deposit holder in the southern basin of the Golden Triangle. And really, you've got Newmont and you've got Skeena. And outside of those two entities, the next biggest entity is Dolly Varden. So, I think that we're in a market with the disparity between metal price and metal price for the equities. With that disparity, I think companies like Dolly, who have $350 million market caps with $40 million in cash, no debt, and the ability to raise money in a non-dilutive way through institutional shareholders and corporates, we need to be on the M&A hunt because we're in a market right now where it's almost as cost effective to acquire as it is to discover. So in a paradigm like that, you need to be spending a lot of time on M&A. So, whether it's, I don't want to really tip my hat to the companies that we're monitoring, but as we monitor companies, there are many companies that are monitoring us. I spent 10 days in Colorado at the Beaver Creek Conference and then off to the Denver Gold Forum. And we're now in an environment, because of $2,600 gold, because of $32 silver, where everybody is out there looking for growth. There was a deal that was announced just before Beaver Creek, which was the First Majestic Gatos merger. But we're seeing a flurry of M&A, Sentiment Egypt, Osisko Mining, and these are deals that they're all measured in the billions of dollars. So for Dolly Varden to be out there with the size of inventory at the grade, with the valuation that's in and around $250 million US dollars, we are extremely undervalued, relative to the market we're in today.
What type of assets are interesting to you? Maybe you could add some colors when it comes to parameters on jurisdictions, maybe even province, type of metals, and also, size.
So we have a competitive advantage in the Golden Triangle in British Columbia. We have a competitive advantage. And I look at regional synergies. I look at areas where our ore can fill neighboring mills. I really think that it's incredible the value when you put two projects that are adjacent to one another or within very close proximity, the synergies. We've seen it with Newmont and Barrick in Nevada. We've seen Agnico take the lead in the Abitibi as the lead consolidator. So, Newmont has done a lot of work in the Golden Triangle, starting with Saddle and then Newcrest, and being the big producing entity. Skeena has also done incredible work consolidating Questex and other deposits. A number of projects, SNP, SK, and really what I'm trying to do is I'm trying to follow in the footsteps of the Barricks, of the Newmonts, of the Agnicos, of peers like Skeena, and pick out, the Golden Triangle is full of a lot of opportunities. There's a lot of grade, there's a lot of tonnage, and really we've been in an environment right now where, up until the last 6 months, this market's been no bid. And now we're in an environment where, the gold price is moving today, not because the Chinese or other central banks. It's moving today, in my opinion, because generalists and Western buyers are waking up and they're getting along the ETF. And that's really what's propelling the gold price. And in that environment, we're starting now to see the Barricks, the Newmonts, and the Agnicos catch a bid that's trickling down to some serious M&A. So look, you just have to look at a map. Look to our west, look to our north. There's some incredible things that are happening just outside of our borders. But really the big story for Dolly Varden, and the reason, in 4 years we've only done 2 M&A transactions, is we're patient. I worked on the Homestake transaction for 2 years. I worked on the Big Bulk transaction for 4 years. We acquired Big Bulk for $275,000 in shares. And that was, patiently waiting for the junior that had optioned the property to get down to 2 cents a share, for them to have no treasury. And we came in very opportunistically. It was the same thing when we partnered with Fury. When we started this exercise, we were a $20 million company. When we launched that deal, we were closer to $100 million. We're closer to $350 million today. So the M&A deals that we've done have been accretive. Our share price is up 500%. Our market cap's up 2,000%. But we're not going to run out and force things. We're not going to overpay. We're going to be disciplined, but we're also going to transact. there's some companies, Mark Bristow's out there with Barrick right now, and he's talking about, being super, super disciplined. Well, he hasn't pulled off the big deal that Sean Boyd has done or others have done, like Newmont. So, we're not going to have analysis paralysis, but we are going to be selective. We will be thoughtful. We'll talk to our shareholders, and we'll do deals that are accretive.
We talk about synergies in the Golden Triangle. You mentioned, perhaps using a mill for your ore. I mean, it's hard to not think of Ascot Resources. Obviously, you can't comment on anything specific, but how could that, just hypothetically, fit together, if at all, with Dolly Varden?
Listen, I think right now my focus is every dollar we spend, how does this impact the share price? How is this accretive? And our focus right now, we think the lowest hanging fruit is organic growth. We don't think the market, we're not the most undervalued company on the board, but we're far from being at the other end of that spectrum. So right now, the focus, where we've invested the big portion of our capital, is in our own project. And the catalyst to come, the reason that I'm on this program with you today is I really want to let your audience and the world know we've done a lot of drilling. Look at the drill results we've put out, not just in June, not just in August, not just in September, but go back the last 2 or 3 years. The best drill holes in the Golden Triangle, 100%, arguably in the world, are coming out of this project. And, those are big statements, but we're backing them up with big numbers. 1,500 grams of silver over 15 meters, 46 grams of gold over 25 meters. Look, I work with an organization that's partnered with Frank Giustra, the Fiore Group. The Fiore Group has bought mines out of bankruptcy like Madsen. We've got a lot of access to capital. We've got skill sets that go beyond exploration and geology. We've got 27 mining engineers in our office. So we will continue to monitor and look at synergistic opportunities throughout the Golden Triangle. But right now, our focus is organic growth.
Phyllis Baker was recently removed as CEO of Hecla Mining, and they are a largest shareholder. Or no, they're not your largest shareholder. Actually, if you're a gold mines shareholder, they're your second largest shareholder. What impact do you have to expect this to have on Dolly Varden?
I think the more interesting question is, what impact does this have on Hecla? And, we've got an incredible relationship that we've developed, that I've developed over the last 4.5 years, and the company's been developing even longer. And whether it's, there's, just like I am not Dolly Varden, I am a part of Dolly Varden. These companies, they take a village to build, and it goes beyond the company, it's the shareholders. So look, Phil and I developed an incredible relationship. We've got a good friendship today. He's just an incredible individual, and he was an incredible executive. When he took over Hecla, the company was focused in Venezuela, and he elegantly transformed the company. And he's got just a crown jewel of an asset in Greens Creek. He was a big part of the reason we were successful is because of Hecla's support. And, we are continuing to work with their technical team, with their business team, with their interim CEO. And ultimately, Hecla's in the business of growing primary silver in safe jurisdictions. Phil Baker was asked in January, why Dolly Varden? He had just increased Hecla's stake in Dolly from 10% to 15%. And, one of the pundits said to him, what's so great about Dolly Varden? And he said, nothing. He goes, but they have silver and they're in Canada. And that's why we're there. And I think it's that simple. Look, if you want to be in silver, Dolly Varden's on your radar. If safe jurisdiction silver is important to you, we're essential.
So in other words, you don't see, the Hecla's growth strategy changing materially with the new, now you don't know who's the new CEO, but...
Look, could our growth strategy change? it's possible. I can't get into, ultimately, for all these companies, whether you're Hecla, you're Dolly, you've got shareholders at the top. The shareholders dictate what they want. Then you've got your board of directors, and then you've got your management team. And so for me, I listen to Eric Sprott. I listen to Hecla. I listen to my shareholders. I listen to Fury. I listen to my institutional shareholders. I listen to my retail shareholders. I talk to them. I have a team of communicators who go out all over the world and talk to existing and prospect for new shareholders. And you know what? In the 20 years I've been in the mining business, and I've had some success, I attribute that success to listening. And I'll always listen. I'll always listen to the market and the wants and needs of my shareholders. And if we continue to do that, good things are going to happen. And we're going to face times like, 2 years ago, I went to Beaver Creek and a conference in Colorado, and our stock was 35 cents a share. And I wasn't sure. It was so 2022. I wasn't sure if we were going to have a drill program in 2023. And you know what happened? We had the biggest drill program in the company's history, 51,500 meters. Look, I can't tell you what's going to happen tomorrow, but what I can tell you is the company's in a position with enough treasury and a clean balance sheet and enough mineral inventory that regardless of anybody's strategy, I know what we're doing. And ultimately, I want to grow this company into a Hecla. I want to grow it into a top 10 silver company. I've been saying that for 4.5 years, and it sounded crazy 5 years ago. But today, after going from 20 to 350, it sounds less insane. It sounds possible. We are limited to our management team's ambition and the support of our shareholders, and also, how great our projects are going to be. But what we've demonstrated is we'll add to our projects. We're not, a lot of investors are like, I know Dolly Varden. I know Dolly Varden. Dolly Varden's been around a long time. You don't know Dolly Varden because every day Dolly Varden is changing. Every drill hole, every acquisition, this company, every financing, every time we go out and do a meeting, this company is growing and evolving, just as Hecla is. And so I can't speak for their strategy. I can't speculate on it, nor can I speculate on Ascot or other things that are happening in the neighborhood. What I'll do is we'll keep our own house in order. We'll continue to grow organically. We'll continue to monitor opportunities, and we'll continue to talk to larger entities like Hecla and smaller entities, and we'll continue to do the next right thing. And that's been working for us so far. I have a very simple mantra, whether it's me coaching on the soccer field, on the football field, or whether it's me in a boardroom or out at camp. It's all the same. Surround yourself with the best people, incentivize them, and work extremely hard, and good things happen.
So when we spoke last time, a few months ago, you mentioned in May next year you would like to release a mineral resource estimate. Actually, more or less your first mineral your second mineral resource estimate, how you calculate it. But at least it will cover several years of drilling. If it was 2019 since you had your last MRE based on data, and then you would follow that with a PEA. Is that still the plan?
Listen, everything is data dependent and data driven. Exploration's a fluid business. So, listen, we might get all the results, and we're in a position right now where we've drilled over 50 drill holes. Okay. And we've got over 50% of that drilling. We don't have the assays back. And so, what I've always said is, these are moving targets and we're data dependent. So whether we put out an MRE, I haven't specifically guided when an MRE is going to come. I never have, and I never will. The idea is, look, we'll take the data. We may look at moving towards, because this is what you don't want to do, Jasper. And I'll explain this. When I first came into Dolly Varden, there were many that said, Shawn, you've got 40 million ounces of silver at Torbrit. Why don't you just take it into production? You could produce 4 million ounces of silver for the next decade. And I said, no, that's a horrible strategy. And they said, well, what are you going to do? And the reason I thought it was a horrible strategy was the price of silver was $16. Okay. And I had a belief that couple of things. Number one, I thought silver was grossly undervalued, as I do think it is today. Number two, until I understand the size of the system, and as we explore and as we develop and as we learn new things and as we grow, if I start thinking about economics and I start thinking about planning and I start thinking about mills, and if I don't know how big this system is, and I build and plan and develop for, it's like developing a city. A lot of cities are developed for their population today, not for their population in a decade or two. And that's a mistake. So what I'm trying to do here is I'm trying to understand. Now, I really fundamentally believe that we have enough cash now to get us to that economic study. And we will wrap our arms around how big the system is and put it out in an economic study. It won't be the finite. It'll continue to grow. So to answer your question, there will be an MRE and there will be a PEA. I just haven't put my finger on exactly when in the calendar that's going to come. What's fantastic about Dolly Varden is there's been companies in the past, Great Bear is probably the best example, where Great Bear had a $2 billion valuation and they had no resource estimate. What I take a lot of comfort in at Dolly Varden is we do have a foundational 43-101. Actually, you mentioned Ascot. Outside of Ascot, in this part of the Golden Triangle, and again, with the exceptions of Newmont and Skeena, Dolly Varden is the most developed project from the standpoint of having a compliant, high-grade resource estimate. So the reason I'm not, so focused on a new 43-101 is because we have a foundational 43-101. We have 64 million ounces of silver and 1 million ounces of gold in a compliant estimate. And look, we've got an incredible data room. And for anybody who's come in and signed a confidentiality agreement, majors, mid-tiers, etc., they have access to that report. They have access to all the drill data. They will come up with their own models. They'll come up with their own plan. So it's all there. It's all there for, at the end of the day, who's going to buy this company, or if we decide to develop it ourselves, is going to be on the back of data, which is all out in the public realm. Every drill hole, it's all there. So you've got the foundational resource estimate, and a resource estimate today is not what a resource estimate was 20 years ago. And so to answer your question, look, for me, it's all about growth. It's all about discovery, and so at the appropriate time, we will invest in the studies. Right now, it's time to understand how big this system is.
Where do you envision Dolly Varden silver in a year from now?
Oh, that's a great question. For me, it takes a decade to build a company, minimum. One of these growth, nano caps that you're trying to launch into becoming, a $1 billion company. It takes a decade, minimum. And so I'm 4.5 years into the journey, and we've done a decent job getting it to where it is today, from 20 million to 350 million. I want to just continue to grow. At the end of the day, a year from now, what I would consider success is if we could continue the work we've done over the last 24 months, I would say that would be incredibly successful. The share price is up 100%, and we've had the best drill results in both gold and silver in the first half of 2024. And we also have just put out some spectacular results. I haven't ranked them. I think, if you could probably look at a company like Aya, producer in Morocco that's, maybe the one company that's put out some better results than us recently. But at the end of the day, if the next 12 months replicate the last 12 months, I would say that's wildly successful. I would be very, very happy with the outcome.